What's going on, everyone? I hope you're well and doing great on this Wednesday of Wednesdays. I wouldn't want to be J Bout today. I think that's how Wes put it just before inside the Discord, that he would not want to be Jerome Powell today. And that's the truth of it. And we could take the easy way out and we could say, well, it really does not matter for us. We are right now coming from a position of power. We are into trades that are looking good coming into the FOMC. And regardless of what happens, we'll be okay. And maybe only okay, right? Cardano taking a new entry last night. It's taken an entry and it's got a steep stop loss. I've looked at past FOMC days, including that March hike, that first live rate hike. The volatility surrounding even Cardano during these live rate meetings has not been as excessive as you would thought, but anything could happen. And if the worst case scenario were to happen today, and that would be, well, what would be worse? Let me ask you, if Powell came out and raised rates 50 basis points, which would likely see risk assets crushed quickly, or if he came out with pausing, that would likely send fear throughout the markets that the banking situation is worse than has been let on. You could see, and I've seen some crazy price action. I just got to go back and make sure that we have some volume. Sometimes there's, you know what, Michelle? There was also a great interview with Raul and Pomp. And look, regardless of, Raul, regardless of his track record, the guy is able to articulate things extremely well. If you go towards the latter section, about 3/4 of the way in, when he starts talking about assets, including Bitcoin and the equity markets in relation to the balance sheet, I think that is high signal. I think that the way that he is very well spoken, the way he relays that message, and if you haven't seen that, I would, oh no, head snack, ice cold showers inside the crypto space. That means that there's pain to come. That means get rid of all of your bullish expectations. We're in store for some pain. Now that could be and that could not be, right? I mean, look, like with how CTM is positioned right now, and this is all going to meander back to me saying that it really doesn't matter because we are positioned from a power of strength. But at the same time, we want to talk about things that are extraordinarily important, which is what policy is dictated by the Federal Reserve. The US dollar is still today the reserve currency of the world. We saw some shots fired between President Xi and Putin as they've had an agreement that they're going to be trading in yuan, that they are going to become each other's largest trading partners, that their geopolitical, territorial pursuits are both mutually important to each other, and that Putin was saying, hey, listen, throughout Latin America, Africa, Asia, he would like to see the yuan further adopted. Now, I mean, the Great Reset is upon us. What that means is monetary policy is coming to an end under its current form and will look different. What that looks like, who knows? There is a lot of debt throughout the world denominated in dollars. That debt needs to be paid back. Even if trade throughout the world sees an uptick in yuan and a downtick in dollars, the US dollar, it looks like for the foreseeable future, is going to play a large role. And it's true, the digital dollar might even increase the dollar share of that. Look, when I first started talking about de-dollarization taking place in like 2018, 2019, people wouldn't even have the conversation. Actually, people were triggered by the conversation. Now it's as clear as day, but it doesn't mean now that it's clear that it's going to happen as a rapid rate. We've seen and we've heard talks about hyperinflation occurring within the next 90 days. I mean, to me, that seems sensational. I don't think that anything like that is going to happen. Either which way, bringing it back. Raul interview is very good. If we see some type of bullish outcome today, bullish for risk assets, if we were to see, for example, I think the most bullish outcome would be a 25 basis point hike, followed up with Powell pausing. The rate hike, of the tightening cycle, the rate raising portion is over with, at least until inflation comes kicking back up. If that were to happen, if the Fed were to signal a pause today and a 25 basis point hike, it looks like that would be, even though it looks like risk is extended, we're looking at Bitcoin since we entered the trade up 19%. It's about 30 or 40% in a week and a half. Is that like, 46% Bitcoin doing Bitcoin things? It's amazing. Isn't it really nice whether or not this current move continues? Just to see in a timely manner Bitcoin doing Bitcoin things and knowing in the future a lot more of that is in store. Now, we could see it is possible if the Fed moves to a pause that we actually, regardless of the initial outcome, maybe a 25 basis point hike has a pullback. I don't know what's going to happen. I really don't. And not until we get to the presser do we see some type of resolution, and then you could see risk take off further. Sometimes overbought could remain overbought for an extended period of time, and that usually happens around big turns. We look at the NASDAQ over here, and we've had a massive breakout, but we're not going to look at that one. We're going to look at this one over here. And we've had, again, first breakout, second breakout, two major repairs have taken place. This line over here is a failure. Closing below that, and likely we are, testing the lower trend line over here, and a breakdown below that into the 12-month lows. All that could happen, but right now this is very bullish, right? You could see pullback, retest, resumption up. That would come from the Fed hiking 25 basis points and then signaling that for now they are moving towards pausing the hiking cycle. And if that were to happen, these positions could continue to run well into profit, including Cardano. And Cardano just entered a position, and I have to say I'm not happy about that. I feel like that added risk, which I don't want to take on coming into the FOMC, and then you have to just view it, or the way that I have to view it is in the beautiful dance. And that means that if we saw the Fed come in with a 50 basis point hike or a pause, and a pause could be frightening to many market participants, and we saw straight down dump occur, I assume out of the three, Cardano would get hit the worst. We have a 20% stop loss, right? And why I've said that volatility has shown around these meetings has been about a 3% move on Cardano. Who knows what could happen? So, the way that I have to look at that is say, well, actually that would probably be painful, because Bitcoin and Ethereum would be giving back significant gains, and maybe not, and maybe more than enough that it doesn't make up for that. So I always like to look at the weak spot. That seems like the weak spot to me. Now, other people might be thinking, oh, I'm going long Cardano here, and this thing could pump 10% by the end of the day. Well, yeah, that could happen, but I prefer managing and looking at my risk, not looking for the profit potential. Because if you do that, if you focus in on your risk, you're going to see that all of a sudden, like, things like this happen, and that you're holding an open position, 19% into profit, and that's not the first time. This just happened to us, the first week of January as well. So yeah, I think that if they were to pause, because right now inflation is moving in the right direction. Now, if you saw, we saw inflation uptick in Europe over the last couple of weeks. This morning in the UK, an uptick in inflation. And we know that right now we're towards the period where we saw that peak. We called it in June as it happened, or July, I should say, 9.1 CPI reading. And it took longer than I expected to begin rolling over. This went through like September to October, and then like momentum started picking up, and we see inflation coming off, and we have momentum going on our side, and that's good. And yes, you could look at things like true inflation, and they're showing inflation coming off a lot more than the government's calculations of that. But the government, they went ahead and they did something that they recalculated the way that the CPI is measured. And the reason that they did that was to show the this month's CPI a higher reading, is so that going forward into next year, it's actually going to look like they're winning the battle on inflation, because year over year the readings are going to be more favorable, even though that's not really what's happening. Regardless of what true inflation is showing, that's not what the Fed is tracking. And regardless if it's lagging, and we all know that the Fed tracks lagging indicators, the job market and CPI. But that's what they do. It's what is. It doesn't matter what's correct when you live in this world. It matters what is. So if the Fed were to pause, that would likely send the signal to a lot of people that they are not being forthright with us with what's really happening inside the banking system, and that it's a lot worse because the Fed does not have any of its signals to move towards a pause. It's moving in the right direction, but it's still got a long way to go, whether you're looking at or tracking the unemployment rate, or you're tracking the CPI rate. So if we see that occur, then I think that would scare a lot of people. And that's why a pause would be, in this case, not a good thing. In my opinion, the most bullish thing would be a 25 basis point hike, and then Powell, with his words, messaging that, and maybe there's on the table for the next meeting another 25 basis point hike, or opening up the opportunity through verbiage in order to say that, you know what, depending on what the data presents, we could move towards a pause. But instead of talking about ongoing rate hikes, they could just probably hike 25% and remove that verbiage. Now, Wall Street has no idea what's happening. You have all different views. Goldman Sachs calling for a pause, other people calling for 50 basis point hikes, and it's really unclear. And that's what makes this, once again, the most important FOMC meeting. But the truth is that the Federal Reserve runs the show. The Federal Reserve are the ones dictating monetary policy for the U.S. dollar, which is the reserve currency of the world. Maybe one day it will be, whoever China's head of the Bank of China is, having a meeting dictating the policy for the world. Or maybe we will just know what the monetary policy of the world is if we're ever on a Bitcoin standard, and there's no need for any type of meetings to take place. If you looked at, or we're looking at over here inside the macro channel, this was posted this morning, and we've been looking at a lot of people talking about all different ways to gauge global liquidity. I put in the ticker for this right here inside the macro channel if you want to see it. And this is a measurement. If I go to, I'll show you exactly what the makeup is. Yeah, so here we're looking at the Bank of Japan, China, ECB, and US. And if you see the big four central banks together, this shows, or it looks, especially over here, looks like a very tight correlation. One of the things I've noticed is that this is where the Fed began hiking, right? Well, it's in April. That was in March. Off the bottom, when you look at all the central banks together, that seems to give the bottoming signal. It doesn't give the top, though. If you notice and you zoom out a little bit, you could see this is where Bitcoin starts diving, and this is where the central banks in aggregate begin pulling back their liquidity. So there's quite a lag between that, And if I go to the last cycle before that, let me go to the top of 2017, you can see Bitcoin tops here and the central banks aggregate tops over here. I mean, Bitcoin's off massive between that point, right? So it's not a good topping signal, right? You can see that Bitcoin is off 62%. But it is a good bottoming signal because you can see over here, you see right here is where it bottoms, and then you see aggregate central bank balance sheets rising. Or I'm sorry, that's Bitcoin. This is where they begin rising right here, and that's the bottom of Bitcoin. Now, it's not the bottom of the Fed's balance sheet because the Fed is still running quantitative tightening back over there. So let me just show you really quick, and this is all related. So over here, the Fed is pulling back. Whoa. The Fed is pulling back their balance sheet. Bitcoin's rising, but Bitcoin's rising because global liquidity seems to be rising. So it seems to me to be a good bottoming signal and a bad topping signal. And that reverts back to when we did our work on the monetary base total. This is dictated by the Federal Reserve, and that seems to be a really good topping signal. And if you come back over here to the peak in 2018, right, again, a good topping signal. So we have good topping signal looking at, and you remember when I had that conversation and was talking about monetary base total, and I said for the bottom it doesn't work, and we don't have a clear signal? Well, it seems that the aggregate is a much better bottoming signal, and monetary base total is a much better topping signal. Bitcoin is the good topping signal, but it seems that, because look over here. So here you had Bitcoin top and come in massively. So I think that's where you could see during that particular point in time, right? You didn't see monetary base total top. So I think that's the way I see it. Great morning, Jen. Ace, thanks. Appreciate that. I love talking markets with all of you. So it's going to come down to the presser, in my opinion. It's going to come down to what Powell leads going forward from here. Is the hiking cycle going to continue until they are able to claim victory? Do they indeed want to cause more pain? And if so, then it's time for risk to pull back. And if he signals, even with the hike, 25 basis point hike, that actually, maybe we've done too much and we need to pull back, then we could continue to see, I think, risk continue its move. And then I think the most bullish situation would be if they wound up hiking 50 basis points. And yes, risk would get obliterated, I think, but the more pressure that the regional banks come under and the more of their book they need to offload as a temporary loan, they're saying for a year, but likely that's never comes off their sheet, off the Fed's balance sheet, and they have to print money for those loans. So the timing in between of that, like between more banks being under pressure and the Fed needing to then print more, well, that's the hard part. And that's the piece that might take a lot of people out of the markets today. So at the end of that, I have no idea what to expect. I have my own belief is that they hike 25 basis points, and then likely Powell is going to communicate that they want to continue to get ahead of the situation, that they feel like they're making good progress on inflation, and it's important to maintain that fight. And I don't think risk will react well to that initially. That I don't know if I'm right, of course, I don't know, but that's the way I see it. Now, if Powell comes in with a 25 basis point hike and then signals a pause, well, then I was wrong, and risk is going to react, I think, very favorable to that. We could actually see this continued oversoldness that we're experiencing continue to put up a lot more pain. And is that like towards 40,000? I don't even know. Let's take a look. Bitcoin into resistance right now, into horizontal resistance. I mean, I have the next area of resistance. Yeah, I mean, I have it like at, you know, just below 38,000. And if I zoom out over here, there's for sure a level between, so we'll call it between 38 and $40,000. I mean, that move could happen quickly. Bitcoin doing Bitcoin things would not be unusual at all. So that's it. That's the best way I could lead us into today's meeting. And I have to say, I'm not so comfortable about Cardano. And, you know, I'm not looking at if we get like a pause off a hike and it's a dovish hike, and it's dovish because it's the last hike of the cycle, unless inflation comes back, then, you know, look at these things could blow upwards. Well, I don't know about that. Don't forget, and this is a great reminder here, that when Bitcoin CTM 2.0 took this entry, a lot of people thought this move had already gone way too far too quick. And you can see it's moved another 19% into profit. That is the beauty of CTM 2.0, is that regardless of what you think, it's a momentum, and where that momentum goes, it's gonna keep you on there. NASDAQ price is 130 more than mine. Yeah, so I'm using the E-mini futures over here, the NQ, and I'm not sure what your MT4 normally looks like in relation to that, and there's no way to tell which way the lag is going, and it could be, as Michelle is saying, with the stream. That's the most likely case over here as well. All right, so let's take a look over here at what else is going on in relation into stocks. And so what's neat about today's FOMC meeting, if anyone is trading stocks, is that it's happening during market hours, and it's happening with enough time to get you out of a position if things go the wrong way. Of course, stops are respected during normal market hours, which is a wonderful thing. Tesla holding an open position, 1.2% into profit. The question came up. Now, my question to you all is, I think that we should move the options sections to CTM blanketed, right? If you're new here and you have not yet gone ahead into getting started CTM, there's a video over here. It's called Conquering the Markets Overview. Watch this video. It's really good, and it explains really well the different segments inside of CTM. Whether you're talking about CTM Core, the Summit team, the Dev team, CTM. Watch this video. It's very important. But I think that in order to see, right, when we introduced stocks, it gave us a new edge in the markets. At a great time, because a lot of people are very uncomfortable and uncertain about cryptocurrency brokers, and will feel a lot more comfortable participating in the public markets. And whether or not it's Tesla, whether or not it is the TQQQ, right? By the way, also holding a massive position here, 12% into profit. Even if we see stocks get obliterated today, this should get out at a nice exit. The signal period occurring right at the time the press conference begins, 2:30 p.m. Eastern time. And then again, after the presser, there will be another signal period. And then we also have FNGU holding a mere 5% into profit coming into this one. And don't forget, on the year, it's just been absolutely crushing it, outperforming crypto. 78% on the buy side. On the inverse, another 6-7%. So drastically outperforming crypto, and it gives people another, arrow in their quiver of strategies. But CTM began digging in and wondering about the options in relation to using this. And I've never traded an option in my life. I have no experience in options. And I feel that when you're participating in the capital markets, you better be an expert if you are putting capital behind what you are doing. So that's why I don't trade options. There's a lot to it, including things that I don't have enough experience with, including how they're priced, time decay. I've just never done it. Now, I would like to, over the years to come, be able to become be proficient enough that I'm able to execute in the options markets. But a lot of you have been doing it for many, many, many years and longer. And I think that organically seeing where that grows is a good thing. James has a really good insight / question here, and he's talking about potentially implementing a bull call spread or a bull put spread with CTM 2.0 and Tesla, right? So for example, yesterday that trade just opened up on Tesla, the long one, the 180 put at the market, along with shorting the underlying, thinking a 20 to 80% allocation, or vice versa, right? Is it possible that, and I don't know, again, I have no experience in the options market. I can't take the lead on this, but throughout the community overall, if that information and collective information is able to be built off and built on, there could be something. So yeah, he's probably saying it's better to go short on the even though you get a long signal, to go short the underlying and then take well, I don't know. Anyway, also the short 150, 170 put just to limit the downside risk by collecting the premium outside the average win trade band. I currently know no way of backtesting software in order to practice this, so it would be a lot easier to showcase this instead if conjecture. If other people agree, then perhaps doing this forward testing in real time together is the way to go, or else the easiest way could probably be naked call or put options. I think all of this is fantastic. I wish I could help take the lead on it. I can't. So all I could do is highlight it and then see if whether or not the community together is able to get behind it. So I think that's the way to go, is by opening that up to the community at large, this channel, and then work together on it in that aspect. And it would be real. And the reason I'm highlighting it, so I'll tag everyone once it's opened up the channel. The reason I'm highlighting it is so that together people could, use that collective collaboration. So yeah, so holding long across the board on stocks, Tesla, TQQQ, and FNGU. We're long across the board everywhere. And then you look at what's going on CTM 2.0 and 8-hour long across the board, and then the daily time frame, except for Cardano, long across the board as well. It's going to be a big one. I'm on a bridge. Right. Yamato. So it should feel very good, though. But don't get comfortable. I don't know what is going to happen by the end of today. I expect fireworks. I do. I would be, with price as overbought as it is, I would be very, very, very surprised if we saw any type of non-event take place. Now, it could be very whipsawy, and FOMC days are known for whipsaw price action. So just be careful. Today's not a day to be discretionary trading. Stay safe, stay calm, and be able to watch it unfold, and then be able to talk about it tomorrow. Kyle, no leaks. Right? Market pricing in something like an 82% chance of a 25 basis point hike. You have investment banks like Goldman Sachs calling for the pause. It's a mix across the street. The real question, in my view, my humble view, is not if they hike 25 basis points. It's what they lead to next. Are they pausing after the 25 basis point hike? Are they going to be adamant that they're going to continue their posture of continuing the rate hiking cycle? That would be the most bearish outcome. And I'm not sure how the market interprets if they hike 25 basis point hike, take out the language of ongoing rate hikes, and that leaves open for next month or the next two meetings another 25 basis point hike. I'm not surprised if they hike another 75 basis point hike this cycle. 25%, 25 basis points this meeting, and then the next two meetings another 25 basis point hikes. And I think the best thing that Powell can do is to keep that an open question, to keep the market from front running, to keep the market on guard. That's why I think that's the path that's chosen today. A 25 basis point hike, taking the language out as far as ongoing, but it's an open question about what happens over the next two meetings. The talk in the conference is what is going to really lead the way here. And that's it. I love today's session. We're light on likes. If you're on your way out today, you have not hit that like button, go ahead, but don't leave yet. I want to leave it open to see whether or not there's anything else that we want to talk about. So I open up the chat right now. Let me know if this conversation's going anywhere else. I know we're prepared and we have it covered coming into today's session off of yesterday's session and today. That's exactly where we want to be. We see the dollar right now, right, testing the support. Notice the wicks below. It's where it closes on the today. It's where it closes, above or below this line, about where the dollar is going next. If they signal that they're not only hiking, but that there's potentially more hikes to come, I think that the dollar bottoms over here. If they move toward a pause, then we're closing below and then likely targeting down in this area next. That's a big drop over here. It was a big move up. It's a big move down as well if we don't find it over there. Yeah, it's my brother, massive love. Was enjoying the letter you sent. It was like 18 months ago, just the other day. I'm grateful for each. Yamato, thank you for bringing a big smile. Thank you for bringing a big smile. Well, the ECB is not paused yet. And what was interesting to me today, Christine Lagarde, she had a comment out because they just had their press conference last week. They hiked 50 basis points and signaled that there's more hikes to come. And today there was a communication, which is weird, right? Today's Jay Powell's day. Today's the Fed day, to have the ECB chairwoman, Christine Lagarde, say that, their plan is to continue hiking, but they might not. Like they leave it open that next meeting they pause, but their plan is to keep hiking. And I think that's what they want to do. They want to be as obscure as possible. They don't want to tell you what their plan is so that everyone could front run. So I think that they're trying to I think the best plan that they could have would to seem confident, to seem in control, and at the same time to keep everyone guessing. My view is that really there's a 25 basis point hike, that it's not the last one, that it's not signaled that it's a pause, and that whether it is or isn't, that everyone's left guessing about what next month is. That's my view. Obviously I don't have a crystal ball, but that's my view. All right, everyone. I'll see you all tomorrow. Stay safe, trade your strategy, and stay in control. God bless you all. Enjoy this day. I will see you on the inside as much as possible. Today's a little harder. We just arrived home in Mexico for the week. So, but today's a busy day. So we'll stay in front of it. All right, everyone. I'm going to open up that channel now on the options to CTM overall in case anyone wants to begin, building off of James' thought here. Any input, insight, and expanding on it. Have a beautiful day, everyone. God bless you, and I'll see you tomorrow.